Now, let's answer a problem. So, I have indicated a problem here in an Excel file. So, this is a financial statement, comparative statement of financial position of one company for years 2020 and 2019. And I will give you time to read this problem. So just pause and then unpause when you are ready to solve with me. So the problem asks for the cash provided or used by operating, investing, and financing activities. So if we are going to prepare a statement of cash flows here, we start with the operating activities. Now we need to get to know the amount of net income. So we will start with the accumulated profits beginning. So how much is that? That would be 80,000. And we have identified here that there is a cash dividend that is charged to accumulated profits. So we will add that dividend of 100,000. So the balance of accumulated profit before dividend is 180,000. Now we have to compare that to the prior balance of 2019 accumulated. Actually, this is a deficit of negative 150,000. So we will now have our net income of 330,000 pesos. Now we have to adjust this with the non-cash expenses. We have our depreciation. So we have our beginning accumulated depreciation of 180,000, and then we will take note that there is an equipment costing 50,000 pesos that was sold for 20,000 with book value of 40,000. So therefore, the written off depreciation is how much? 50,000 minus 40,000. So we still have 10. We had a write-off of depreciation there amounting to 10,000. And then we will compare this with the beginning depreciation of how much? 80,000. So now our depreciation expense is, so 180 plus the 10,000 minus 80,000, 110,000. And we also have the loss on sale of the equipment because it was sold at 20,000, but it has a book value of 40,000. So 40,000 minus 20,000, that is 20,000. So we will add that back. So after income, the income after non-cash expenses would be 330,000 plus 110,000 plus 20,000, 460,000. Now we will have our the change in working capital. This would be the current assets and current liabilities. So we have accounts receivable. So when a current asset increases, it means that there is an increase in investment of that current asset, which in turn a decrease in cash because, for example, the accounts receivable were not collected. So if they are not collected, meaning in which they should have, we have less inflow. So 450, the beginning balance of 450,000 as compared to 600,000, there is an increase of 150,000 for accounts receivable. That would be a deduction for operating activities. For merchandise inventory, we have 450 minus 670. And then we have for prepaid expenses, we have 250 minus 130. So in here, we have less prepaid expenses, meaning we paid less for prepaid expenses. Therefore, there is an increase for our cash. While there are no more current assets, we now go to current liabilities, accounts payable. So in here, if there is an increase in current liabilities, that would in effect minimize our investment in working capital. Or if we would look at it alternatively, there is a higher amount of payable for 2020 as compared to 2019. Then that must mean that we are still not paying a certain amount of payables more this 2020 as compared to 2019, which in turn would give us a higher amount of cash to keep. So there is an increase of 130,000 for accounts payable as compared to last year. So that would be added to our analysis in operating cash flows using the indirect method. While for accrued expenses, there is a decrease of 60,000. So that would be deducted. So the change in working capital would be negative 180. Do we still have other items pertaining to operating activities? When there are none, this would be our cash provided by operating activities, which is 460,000. So we'll deduct 180,000 there. So that would be 280,000. Well, now we go to investing activities. So what are the items that we need to consider in investing activities? The non-current assets. So we have building and equipment, wherein there is a change of how much? 900 minus 750, 150,000. But we have to take note that there is an equipment of 50,000 that was sold for 200,000. So that should have been the ending balance, if that equipment was not sold, should have been 950,000. So we will add that back. And also we have so this is the outflow from, this would constitute outflows because an increase in, this would be an increase in investment in property, plant, and equipment. Now we need also to consider that there is that the cash inflow from the equipment sold would be an inflow for investing activities. So the proceeds from sale of 20,000 would be included here. So our cash from investing activities, would this be all? There is a change in land. From 400,000, it is now 900,000. But we need to consider the additional information that states land was acquired for 500,000 in exchange for ordinary share, par 500, during the year. So all equipment was purchased for cash. So this would be pertaining to that. But the land since the change in land is 500,000, and if we will look at the change in ordinary shares, they are also 500,000. There is no cash involved in the purchase of land. So the cash from investing activities would total negative 180. So this is the cash used in investing activities. Now we go to financing activities. So in here, we need to consider the non-current liabilities and shareholders' equity. So we have the notes payable. So the notes payable change from 400,000, it is now 0. So it means we must have paid for it. So there is a decrease. So if there is a decrease, that is cash used. Now, for the mortgage payable, there is an increase amounting to 300,000. So an increase in 300,000. What else? We need to consider here that, okay, land was acquired, 500,000. We also have cash dividend. So in here, there is a cash dividend declared of 100,000. So dividend declared would be an outflow for financing activities. So 100,000. So the total cash used for financing activities rather would be 200,000. Now, we can now compute for the net increase or decrease in cash. We just have to add the cash provided from operating, use from investing, and use for financing. So 280 plus negative 180 plus negative 200, that would be negative 100,000. So the beginning cash that we have is actually 350,000, and then the ending cash, we have 350 plus negative 100, so it is 250,000. If we will take note of that, this is 250,000. This is in line with the 250,000 that we have for cash balance as of 2020. So that is how we compute for cash changes in cash for operating, investing, and financing activities.